Mr.
Wendy,
Driggs.
ready?
Yes.
So, good afternoon and welcome to this November 16th meeting of the Charlotte City Council Budget and Effectiveness Committee. We'll start off with introductions. My name is Ed Driggs and I chair the committee. Committee members?
Good afternoon, Dimple Ashmera, at-large member and committee member.
Malcolm Graham, District 2.
Good afternoon, Julie Eisel, committee member.
And staff, please.
Good afternoon, Brent Cagle, Assistant City Manager.
Ryan Bergman, Budget Director.
Teresa Smith, CFO.
Greg McDowell, City Auditor.
Corey Burkhardt, Communications.
Beverly Sanders, Communications.
Okay, I guess that was everybody. Mr. Cagle, do you want to go over the agenda?
Yes, sir. We have two items on the agenda today. The first will be a report from Ms. Smith, our city CFO, regarding the FY 2021 audit report. This will also include some information from the external auditor, Terry Beckert. And then secondly, the second item is the FY 2023 budget development calendar. Mr. Bergman, our budget director, will be presenting options for the budget calendar for next fiscal year, for FY 2023.
Excellent. Why don't we go straight to our first agenda item then?
Yes, sir.
All right, good afternoon. Again, I'm Teresa Smith, CFO. The reason we're here this afternoon is that our external auditor must present audited financial statements to the audit committee in an official meeting. And so that is what we are here to do today. And without stealing the thunder of our external auditors, I will jump to the bottom line and say this was a very positive audit. We do have unmodified opinions, which the auditor will talk about. And so it's a good report today. But I do want to introduce our auditors. We have with us Daniel Gogarty, who is with Terry Beckert. He is a director with over 14 years experience in public accounting. He is a CPA, so he will be doing the presentation. And we also have Brian White, who is a manager, who is a CPA with over 6 years of experience, and he has been on the city's job for the last 4 years. So with that, I will turn it over to Mr. Gogarty.
Thanks, Teresa.
Can't hear. Unmute.
Okay. All right. Good afternoon, everyone. So to get started here, just going into this, the audit process is a long process. We begin the audit kind of back in April, May, where we start our planning procedures. We go over with management the changes for the year, and we talk through what our audit plan is going to be and how we're going to approach the audit. And then it all kind of culminates to the end of October, where we're then in a position to be able to provide opinion on the financial statements to the city. And so as Teresa had mentioned, we are presenting to you today due to a requirement by the Local Government Commission to do this committee meeting within 45 days of the date of the issuance of the report. So just from our agenda, I'm going to speak very briefly about our role as external auditor to reemphasize what we are doing, and what is our responsibilities under the audit. Then we're going to go over those key results. Then I'm going to talk a little bit about our audit approach as it relates to internal controls and significant audit areas. And then I'm going to go into some financial performance indicators that the Local Government Commission has created and made for all governmental units this year that need to be presented in this meeting as well. I'll go over a little bit more of the background of that when I get to those slides. So going right into the next slide on the role as external auditor, our audit is performed in accordance with generally accepted auditing standards as well as government auditing standards. It's management's responsibility to provide the financial statements in accordance with generally accepted accounting principles. It's ours to then audit and express an opinion. We plan and perform our procedures to obtain reasonable assurance that the financial statements are free from material misstatement. And we are also required at the end of every audit to discuss any policy changes, whether it be a new Government Accounting Standards Board statement that be issued and presented and applied in the current year, any significant estimates that were used by management, and then if there was any journal entries passed or proposed during the year. Just one thing I wanted to mention as a precursor to the next year is the statements on auditing standards is basically has revamped the audit report. And so you will see next year a new format to our audit report, with the opinion being kind of first in there, and then some additional information about management's and auditing responsibilities. So just a precursor to next year, there will be different language and a different feel or look to the audit report. So on this slide, I have our key highlights and results. We provide 5 opinions to the city through our audit procedures. The first of which is on the financial statements. Second, on internal controls over financial reporting, also known as the Yellow Book or government auditing standards. And then we give us 2 opinions, one on your federal single audit and then one on your state single audit. And then lastly, the PFC, also the passenger facility charges, is an audit we also perform during the year as well. In all 5 cases, we have issued an unmodified opinion. That's the highest opinion we can give under our auditing standards, also known as a clean opinion. And then from an internal controls perspective, we're looking at internal controls from compliance, from the view of looking at your single audit, your federal and state dollars, and then we're also looking at internal controls as it relates to your financial reporting, revenues, receipts, disbursements, and payroll controls. As a result of those findings, we found no issues with financial statement controls. We did find one significant deficiency as it relates to one of the single audit programs, which was the Coronavirus Relief Fund. And I'll go into that in a few minutes. And then we also had one non-material non-compliance finding on the highway and planning construction grant. In all cases, we had no findings that resulted in what we consider to be a material weakness at the city. So going back to that significant deficiency, that finding as it relates to the coronavirus relief funds has to do with subrecipient monitoring. What we were able to determine is that the city has a process to monitor subrecipients, and those subrecipients are being monitored, but we could not verify that was being done with the documentation that was provided. There was some documentation, but not enough for us to be able to give an opinion that the controls were clean. In our determination, we determined, do we have a deficiency, a significant deficiency, or material weakness? We felt based on the level of support that was provided, a significant deficiency was the right approach for this finding. And then we have the other finding of the non-material non-compliance with the highway planning cluster grant. Has to do with a report that needs to be filed annually. They were not aware of that report having to be filed, and the state agency had not been requesting that report, so no one had been aware that it was required. We verified with the state agency that they would like to have that report for the future, and so they have already even filed that report as we speak now for the past year. I'll stop there for a second in case, I don't know if anyone has any questions about that or if you want me to continue on.
Yeah, I wanted to, it's Ed.
Sure.
On the significant deficiency, there's nothing about that suggests to you that there could have been a misappropriation of funds. Is that right?
That is correct. We had done testing over the compliance side of it, and we found no issues with misappropriation of any funds with the items that we tested in our sample.
And presumably our subcontractor has records of all payments that were actually made, right? So we can be confident that this doesn't signify that there could have been any diversion of funds.
Correct. A lot of the subrecipients that we saw were prominent not-for-profits within the area that clearly have done this before for other municipalities and for themselves, and they would have the documentation available to the city upon request.
So we could reasonably conclude that this might have been a result of the time pressure we were under in trying to implement that program and not draw any sinister conclusions from it. Would that be fair?
That would be fair.
Is any action required after the fact to rectify that situation?
So what's going to happen? What has happened is in the financial statements, there's a corrective action plan that finance has put together as to how they are going to address this finding going forward. And we have agreements with their plan of action and what they're doing, and we're going to be also assisting in helping kind of make sure that they're going in the right path with that. But there's nothing else that needs to be done at that point other than I'm going to speak to in a few slides is the LGC would like a letter saying what you're going to be doing with that and having a majority of the board sign that letter to just provide assurance that the board is aware and that they know that what's going to happen is going to remedy the situation going forward.
So that requires a majority of council, not all council members.
Correct.
So it could be the four of us and two others, right? Or 5 members of this committee and 2 others, and 1 other at that point.
Correct.
Okay, we'll deal with that when you get to it. I just wanted to pause also for a moment here and emphasize to my colleagues on the committee that this is an outstanding result. And I'll talk about it when I briefly summarize this meeting to the full council. But it's a credit to our finance staff, the manager, and it's a kind of compliment to our budget process, which has also been tight for years. But I've certainly seen audit reports that don't look like this, and if you look at other municipalities, they don't look like this. Point out in particular the bottom right corner, 1 past adjustment and no adjusting journal entries. That can be a pretty big deal in a badly run shop. So just want to say hats off to the staff. Nice job on this, and we'll kind of address the deficiency issue as needed, but the takeaway from all of this is it's an excellent result. So thank you.
I second that sentiment.
Thanks, Julie.
So just finishing up on this slide, the programs we audited is also here on the 3rd line there, which was the Highway Planning Construction Emergency Rental Assistance Program, Airport Improvement, Coronavirus Relief Fund, and State Aid to Airport, with State Aid to Airport being the lone state funding that we tested. All the rest was federal funding, and 3 of the programs had CARES Act money or COVID relief through any other forms of legislation around it as part of our testing. And then from the required communications, no policy changes. The significant estimates remain the same in previous years as it is, which is allowance for doubtful accounts, depreciation, self-insurance liability, and then also the actuarial studies that are done for your other post-employment benefits liability and your pension liabilities. And as we mentioned before, the 1 past adjusting journal entry was not found to be material to the financial statements overall, and so management had decided to pass on that, and we agreed with their assessment. So the next 2 slides is just to speak to our audit process and approach. As a big part of our audit is looking at internal controls and obtaining an understanding of your significant transaction cycles. Significant transaction cycles include receipts, disbursements, payroll, financial reporting, and close. Those are transaction cycles that have a lot of transactions that flow throughout the year. And so there's an increased level of effort to make sure there's no errors are being reported in that cycle. When we obtain an understanding, we do a walkthrough of those controls to make sure the controls that we're being told are in place are in fact in place and are happening and working effectively. From a single audit perspective, we are testing compliance and controls over compliance. And then from a journal entry review perspective, we are looking at all manual journal entries posted throughout the year and then using certain criteria that would be indicative of more fraudulent type activity to mine down into the details and select certain entries for testing. We then review the support for those entries, make sure it's for a proper business purpose, and that there is also a proper approval in place for that journal entry. And in that testing, we found no issues. From an information technology control standpoint, we have a questionnaire, has 6 or 7 questions on it. one of which is dealing with cybersecurity and any breaches that may have occurred or anything of note that we should know that we should be aware of for our audit purposes. Also, we're asking questions about the general computer controls related to the network in place, the password protection, lockout procedures, just to make sure they're in accordance with standards out there, best practices. From a significant audit area standpoint, we have, this really mirrors what I was speaking about before about the transaction cycles for the most part. And what we're doing with all these balance sheet accounts and income statement accounts as it relates to all these listed here is we're doing a number of things, whether it be confirmation with third parties to confirm the balances and ensure that the amounts presented are accurate. We're also doing analytics, whether it be year-over-year analytics or predictive analytics to determine that the amounts meet what our expectations would be. And also we are doing tests of details where we're actually drilling down into the support, reviewing the support, and determining if it's a correct entry that's been reported throughout the system. For other items, we are looking at some of these other ones as well, but specifically I want to speak about looking at related parties and any related party transactions that may need to be disclosed, any legal issues that would need to be disclosed, and again, any estimates that management has done testing those estimates. So before I get into these next couple slides, these are all the local government commission performance indicators that the city had in this past year, and then you can also see kind of where you stacked up in the past 2 years, even though this is the first year you're reporting on these yourself. So what the local government commission had normally had done is a unit would submit their audit.
Hey, Dan,
and then,
could you comment briefly on what the local government commission is, just to make sure we're on the same page here?
sure, the local government.
Most of us know by now, but go ahead.
Yeah, so the local government commission is a state agency that oversees all government units throughout the state of North Carolina. They have a number of responsibilities, one of which is to approve the audit contract every year and approve the audit that's being submitted each year. And they're doing a review of all governmental units' audit reports.
And we have to get authority from them to issue debt, is that right?
Correct, that is correct.
Yeah. Okay, thanks, go ahead.
So with the local government commission, what they had done normally in the past is they would get the audit report, then a few months later, they would respond back to the unit and say, you had a finding or you had an issue with some kind of performance indicator, respond back to us with what you're going to do, you'd respond back. And that whole process would probably end in April or May of the next year, which would be kind of too late for the next fiscal year to really deal with the problem accurately and correctly with what the LGC wants to be done as well. So what they had done is they said that auditors, we are on the forefront. We know all the issues that have kind of come out of the audit. We can easily identify these performance indicators as part of our audit. And so they wanted us to be part of that process of identifying what these indicators were on the front end, and then having you all respond to the LGC with what your plan is, so that process can be kind of boiled down and done maybe halfway through the next fiscal year versus at the end of the fiscal year. So the first one I have here that is for you here is the minimum general fund balance as a percentage of expenditures. And there's a minimum threshold is 25%, which is identified by that red line across in the middle there. And one thing unique about the LGC's calculation is that they include your debt service fund balance in that calculation. So where you may be used to seeing it at 16, 17, 18%, when you are being talked to about general fund balance, this is much higher than that because of that debt service fund balance being included there.
Could I just say about that, I think we are all familiar with the 16%. It's worth noting that that's actually twice the minimum requirement. So that's a conservative position to take on that fund balance. The debt service fund balance, just to be clear about that, is an amount of money that you set aside in order to meet the following year's debt service commitments So you pre-fund, in effect, your payments for debt service for the next year. And the combination of the fund balance and that amount is what you see here. Could you comment on the decline in the fund balance available? Is there any particular story about that?
I think, well, we talked with Teresa about that when we went through the process, and really was an effort to spend some fund balance down to an effort in terms of budgeting and how you were taking an approach to your fund balance to make sure you weren't reserving too much, because as you noted, the 8% minimum threshold and being already at the 16% threshold.
Yes, I would just add, you all may recall that in the FY 2020 budget, you made an intentional use of some of the debt service fund balance to fund some capital projects. So you see that decline here, but that was an intentional step because we have maintained a nice, healthy balance in our municipal debt service fund.
So this wasn't a basic policy shift or an involuntary action because of conditions, right? This was just a choice we made within the scope of policies that are in place already.
That's correct.
Thank you.
If you go to the next slide, the next indicator that's going to be there is your water sewer quick ratio. Your quick ratio is a ratio of your current assets to your current liabilities. And what they're looking for there, again, by that red line, is they're looking for a minimum threshold of 1.0, in which you have a threshold of 1.67. And that threshold, it really just means you have in excess of 167% of your current liabilities and current assets to liquidate, which is liquid assets, to pay off your liabilities.
So on this one, this is a separate report just as to the enterprise fund, water and sewer, right?
Yes, the LGC takes an interest in water sewer funds if you had an electric fund and general fund activity when they're looking at different ratios. They don't really look at any of the other funds or have any performance indicators for any of your other business type funds.
So in this case, the decline, once again, just represents a decision not to be as conservative about the balances that are maintained?
So in this case, again, Charlotte Water made an intentional effort to use more PAYGO cash for their capital program. So as we looked between FY 2020 and FY 2021, the increase in spending for capital projects increased $100 million. So again, Charlotte Water making an intentional effort to spend down some available cash.
So colleagues, it's not a topic for this meeting and for the audit review, but I think we're all aware that Charlotte Water is running into some bottlenecks. And it looks as if they may have to step up their capital investment, in which case we're going to have a conversation about the outlook for rates because it's all internally funded. And I think this is an initial indicator of that. I would venture to suggest, in particular in that area up in the Northeast, the timing of some of the projects that are being offered, some of the development projects that are being offered, is constrained by the capacity of Charlotte Water at this point. I guess I'll put it that way. So we'll talk about that in the budget conversation, but I interpret this slide to mean that they've already started to accelerate their capital spending. Thanks.
The next slide we have here is just another indicator that they have where you're looking at the operating net income loss, which excludes depreciation and includes your debt service principal. And you can see here, it just the minimum threshold they're looking for here is that your water sewer fund is at least operating at a break even at the very least. And so you are well above the break even, so it's healthy in terms of what you have available in terms of those resources. And then the unrestricted cash to total expenditures and debt service principal being, again, a 16% threshold that they're giving here as well, that's similar to your threshold that you do internally for general fund. And you're at 85.41%. The last thing here are just some of the qualitative factors that are considered in the financial, the performance indicators. If any of these were an issue, you would have to send a letter. We do have the one at the bottom there, but I do want to emphasize that we had a lot of things in there that were met with no issues that you have no response for. One of which is the submission of the expected within 5 months of fiscal year end. We have an October 31st date of our audit report, and we plan to be able to issue that report prior to the deadline of the end of the month. And then the budgeted tax levy for the general fund had less than 3% collected, less than 3% uncollected, and you did have that as well. So that was a positive sign for property tax collections. You have an effective pre-audit process to avoid pervasive budget violations, no statutory violations when looking at your budget to actual results, no late debt service payments or debt covenant compliance issues. And then we have the one significant deficiency and one non-material non-compliance I mentioned earlier that will need to be addressed in a letter formally to the LGC, again, signed by a majority of the council.
Teresa, do you know offhand what the actual uncollected was relative to the 3%?
We do have that. It is in the draft copy of the statements that you have, which this gives me an opportunity to say that. So you all did receive a PDF version today that is a draft. We are finalizing the report and basically working on the visuals. So all the numbers and the footnote disclosures are good. Those will not change. We are just working on getting the visual copy printed. But there is a statistical table in the back that shows that collected percentage. And I don't have it with me right now, but we can get that for you if you can't see it in the back of the report.
If I remember correctly, I think it was even at about 99% collections, if I recall.
Yeah, that's correct. It was right around 99%.
Right, it's been in that range, and then occasionally during the budget process, we look at possible fluctuations there. But so Teresa, I didn't quite make it all the way to the back. That's probably why I didn't see that. In other words, I haven't looked at it yet. But thank you for circulating that.
I just can't understand why with 200 plus pages for this afternoon, so.
Yeah, I mean, I tried, but I didn't quite make it. Okay, what else have we got?
And then just to summarize here, again, clean opinions across the board on all 5 letters that we issue, no adjusting journal entries. So I just want to emphasize there that that really just means that basically what management had provided to us at the start of the audit is what you see here today. There's nothing that we had to adjust as part of our audit to the financial statements. Good internal controls. We did have that one significant deficiency we talked about. No material weaknesses. And full cooperation from management. That's where I want to thank everyone at the City of Finance, Teresa, Betty, and her team, everyone that has really helped make this a success. We did some virtual, and we actually did some coming out on site this year, and it was good to be able to come back out and be able to see everyone and get through the audit process. But we did do a lot of it virtually still, and they really did do a great job of getting us what we needed still on time so we can issue by October 31st deadline.
Great.
So I'll leave this open if anyone has any other questions that you want to discuss.
Colleagues, looks good. CPA, any questions?
No, it all looks great. With you leading, we are good.
So a couple of quick things. Would you say in general that the city's technology and procedures for our accounting are kind of in line with best practices?
Yes, I would agree with that statement. And they're continuing to explore other options as well for financial reporting to do that. And I think everywhere they're going is very good in terms of that.
Good. And there is sometimes board members have a conversation with the auditor without staff present. I don't know. I mean, at least I do that in other audits. Is that something we do for the city?
I mean, I don't think we've done it for the city in a while, but we can do it. I will just say here, I don't think I would say anything different in closed that I would say here, but
if you don't see a need for that, we don't have to do it. It's just a procedural step.
Yep.
So the letter that the council needs to sign, will that be brought forward at a council meeting, or how do we bring that to we're going to have to get everybody on this committee and somebody else, or somehow we're going to have to collect those signatures? When will we do that?
Mr. Driggs, we will evaluate that and work with Teresa and the city attorney's office to understand the proper way to obtain the majority signatures required, and we will come back with you with a definitive answer.
Okay, so if there's nothing else from my colleagues, I just wanted to say to Cherry Becker, you guys do a fabulous job. I've been on several nonprofit boards, and Cherry Becker always delivers, and sometimes in other situations under difficult circumstances. So really appreciate your work. I assume also that we have a letter that says that your cooperation, that you got all the necessary cooperation, that your experience performing the audit was good and things like that, right?
Yes, correct.
Yeah, well, so thank you, all right, and good work. It's been a pleasure for a few years now working with you guys that I've been involved in the city's finances, so really appreciate it. Thanks.
Thank you.
And I guess with that, we can move on to our next agenda item. Mr. Cagle?
Yes, sir. The next agenda item is Mr. Bergman will be presenting on the FY 2023 budget development calendar. Mr. Bergman?
Thank you. So since you guys have all sat through my budget workshop presentations, you'll be happy to know that this is just one slide. So I'll just say a few things for you and then turn it over to you guys, because it's really your budget, your schedule. What I have in front of you is 3 columns. The first column is essentially what a typical year would look like for a budget process, which I'm sure you're all familiar with at this point, with the 3 workshops and then the early May presentation and then a few council meetings. Based on feedback at the retreat where the city manager presented a few different options, it seemed like these were the 2 remaining options that would be under consideration. But I do want to be clear that these aren't the only 2 options. It is at the discretion of city council. We just are trying to put scenarios together where everything fits with everything we need to accomplish. So option 1 there, you'll see the big difference is that we would move up the budget presentation from May 2nd to April 11th. And for all of these scenarios, or both of these scenarios, the intention is that we are getting to a full council budget vote on May 23rd, as opposed to that first meeting in June, the first business meeting in June that we typically would. So option 1 would move up the budget presentation because of the primary election and the general election. In this scenario, we would really only have time for 2 budget workshops, or else, and on top of that, we would actually have to move the first one up to January rather than February. This one would allow for a little bit more time for council to digest the budget after the presentation, and would still allow for budget adjustments, straw votes, and then the council budget vote on May 23rd. The downsides to this one, as I mentioned, realistically, there would only be 2 workshops rather than 3. We'd also be proposing a budget right before a general election, which would certainly be unusual. And then also, anytime we move up the budget presentation, even 3 weeks, you run into issues where the revenue and the expenditure estimates aren't as good as they would typically be when we do it in May. So the second option, and I will tell you, it is staff's preferred option, but as I said, we are able to do either, would be to propose the budget at the same time as usual in May 2nd, do the budget public hearing the next week, which is typical, and then essentially we would have each of the next 2 Wednesdays would be our normal interactions with council on the budget. So the 11th and then the 18th, and then we would get to a 23rd vote. So all of the council meetings are still here on this option. It would just be a little bit closer together, essentially. The advantages of this option is we are able to have as accurate revenue and expenditure projections, and we are still able to have all three council budget workshops. However, the March and the April one would need to be a little bit closer together, about 3 weeks rather than a month, just because of the March primary. We would certainly want to wait until that's over before we did any kind of a workshop. So that's what I have. I'll turn it over to you. As I mentioned, this is an intention to have the budget approved on May 23rd, and that's based on feedback that we received at the retreat. So I'll turn it back to you, Chairman Jones.
Ms. Ajmira, I think you have your hand up.
Yes, I'm just trying to figure out, so when does the new council get sworn in?
So for our scenarios, we had May 23rd being the last meeting for the current city council, essentially. So it would be the next meeting after that. Because of Labor Day, I believe it would be June 7th. Memorial Day, unless there was a special meeting. One of the issues we have is if there's a second primary for a federal office anywhere in the state, the general election automatically gets moved to May 17th, which creates some complications, which might prevent us from moving that date up.
And Ryan, could you talk about what the rules are as it relates to seating the next council? It's supposed to be done at the next strategy session, but not sooner than X days after the election. Is that right?
So in a typical cycle, it needs to be done by the first Monday in December. I'm looking at Marie Harris, who did that work, and she's correct, Marie?
Yes, after certification.
Yes, so the first Monday after certification. And so that's when we would typically do, which would be about 4 weeks after. The rules on this are a little bit less restrictive. I think council has a lot of authority, so there's not the clear guideposts on this modified version.
But I think I remember from talking to the city attorney that there was some requirement that the council not be seated less than a certain number of days after the election, which would mean if the election was on April 26th, that we couldn't seat them at the first Monday in May, and it would roll then to the first Monday in June.
Correct. Yeah, sorry. So on the short end of the scale, there needs to be 10 days. They have to certify the
Right.
election within 10 days,
Right.
which would prevent us from using a May strategy session. And that's, of course, all if the general election is on April 26th, which we will not know until after that March 8th primary.
So, colleagues, I think Mr. Bergman's bias in favor of, Mayor Pro Tem, you have your hand up, too.
Thank you, Mr. Chair. I was just going to give my opinion on which option. Do you want me to do that now, or you were going to start some comments?
No, I'm all ears.
I feel like, especially since it is an election year and people are going to be pulled in different directions, it's not the time to give up one of those budget workshops. It feels like option one, with only 2 budget workshops and the presentation and the hearing all before the general election, that, we're not, I just don't know that we're giving the budget the attention it needs and deserves. So I would prefer option number 2, have that additional workshop and have the presentation, public hearing after the general election, when everybody's got, had a good night's sleep and can focus on it a little better.
Ms. Ajmira, any comment?
No, my question was addressed, but I agree with Julie.
Do you have any thoughts about option 1 versus option 2?
Yeah, I agree with Julie. I think option 2 gives us a little bit more time, because this is very important exercise that we do as a council. So I think we need time to process everything. So I would prefer option 2.
Thanks. So I feel that way too, and I think Mr. Bergman wasn't too subtle in signaling his preference. So it looks to me like there's a pretty good consensus. Mr. Graham, any thoughts on option 1 versus 2?
I concur. Option 2 works for me.
All right. Do we need a formal action by this committee, or what's the next step for us here?
Yeah, I think if you guys took an action that you could report at the December strategy session, because then there would be a calendar vote like you would typically have for next year, which would have those dates on it.
So the only thing then is this remote contingency. If it happened, the election would get moved to when?
It would be May 17th. So we would have some options at that point to potentially adjust that straw vote date. You could maybe even move the council budget vote back at that point, because you wouldn't be seating the new council as early potentially. But I think within option 2, there's solid options in the event that the general election gets moved to May.
I mean, essentially, we know on March 8th, right, after the primary, whether it needs to be a runoff?
Correct.
Yeah. Okay, so do I have a motion to recommend to the full council that we pursue option 2?
So moved.
Second? All right, Ms. Isold,
Yes.
Ms. Ajmira,
Yes,
Mr. Graham. Mr. Graham?
Yes?
Yes, okay. I'm a yes too, so that's unanimous. Good. Appreciate that, Ryan. And Mr. Cagle, do we have anything else?
Yes, sir. So that is the conclusion of all of our items. We are completed.
Well, we could spend the next 15 minutes or so talking about movies, or we could adjourn. So do I have a motion to adjourn?
So moved.
Second.
second.
Yep. All in favor, hang up. Thanks a lot, guys.
Thank you.
Very good. Thank you, sir.